Okay, the measured move indicator for Sierra charts. Now this is a tool we've had this available on Ninja for 4 or 5 years now, and it's become, I think, very well known in the trading community. This was pioneered by David Halsey in his very well known and well received book here. Let's bring it over here just so we know where all this came from here. So I'm just over here on Amazon. So this is where I learned it, and we've adapted and put our own little spin on it here. But I can't recommend this any more highly. If you're interested in a bit of the history of this, this would be an excellent place to come. I can probably get them for these PDFs now. But trading the measured move. Now we would have to call it more typically. We'd make a distinction between a contemporary, let's call it that way, a contemporary measured move and more of a classic measured move. Measured move, that terminology has been around for some time. I'm going to come over here to TradingView just because it's a little easier to draw on. So the traditional measured move was A to B. Right? Well, so here if I drew it up this way and use this tool, the length of A to B would be equal to the length of C to D, right? So we get, you get the idea here if I'm not right on there. Okay, right? So length of A to B equals the length of C to D. Now, that's the traditional measured move. Now, the contemporary measured move is a slight modification of that. And without going into all the details here, again, a couple of places you can go. One, of course, Halsey's book, right, would be a good foundational place to start. But then in addition to that, I've done a lot of training and teaching on this and some interpretation based on how we surmise that he came up with this or identified this. And I've done a lot of content on this, a couple of webinars that I've done on this over for Ninja. So I'm going to refer you to this. I'll put this link directly underneath the video here. This is a video I did for a Ninja presentation a couple years ago. Again, the content is exactly the same. It's just we're using Sierra instead of Ninja. I put this link directly. It's the Algo, a history lesson, and some current examples where I really focus in on the creation, background, all that content here. Starts at 8.5 minutes in. So if you don't want to get that early bit here where it's just me identifying it in, I think in Bitcoin, a couple of spots. This would be a good place to come back here. There's about 15 minutes worth of content here that walks you through all of the piece by piece, how it's put together, and our interpretation of it. So here it is in all its beauty, right? You would think, oh, really, this is the most significant algo in the market? Well, of course, there's no way for us to know. I mean, God knows there's probably thousands of algorithms in the markets, right? We have 98% of all the trading in the markets is done by algorithms. So there's no telling how many there actually are. But this is one that we can identify because it leaves this very clear footprint. It couldn't be any simpler. We get a swing, we get a retracement, and we get a break above that pivot. So we have an internal retracement that goes external. Right? Couldn't be any simpler. Now, what I think most people, if they haven't seen it before, it's quite shocking to see how consistently this algorithm hits its target. Now, again, I'm not going to walk you through all the nuances of it because there's lots of that content available over on that in that video. But let me just come back here and let's go over here and just look at some real examples within Sierra. So again, I've got the micro NQ, YM, crude, gold. I think I'm here various time frames. Here's a 5-minute, 60-minute, 5-minute, 10-minute. What's interesting, what you'll find is that the time frame makes no difference. Absolutely none. If you're looking at it on a daily, weekly, minute, it doesn't matter, right? It's the same algorithm over and over again. So, crude's a pretty good example here. Let's go to crude here. And so here's the algorithm, or pardon me, here's our software identifying this algorithm. Over here on crude, what have I got here? This is a 5-minute on crude here. So you can see here's some, if I'm drawing it, right, it's pretty basic. Here's the swing, here's the retrace, here are the targets, right? Now, you see here, we have both 50s and golden zones here, and there's a stack of them because it's going to pull what our software is going to do it's going to pull from all the significant pivots. So that's why you get a cluster like this. So it's probably pulling from this one, this one, this one. So you get this zone here where we know the algorithm is likely to fire. In this case, it's pulling from the 50s, and we get multiple targets here. Right? So again, it's a function of which one of these pivots is being identified. Do we care? Not really, right? I mean, here, if I were trading this, I'd be out at the first one because we don't know for sure we're going to get the second one. Then it goes again. You see the same phenomenon here where we get 50 in golden zone because it's pulling from multiple pivots here. So again, we get 50 golden zones down here. I should make a point of not assuming that everybody's familiar with golden zone, at least as we use the term. And that is the space between the 618 and the 65. Right, I've just taken to calling that the golden zone, and it's kind of stuck. And you'll find that many technicians will use that now. So in that pocket here, then we get these Fibonacci targets up above. Now these are the negative 23.6. There's also, again, you'll find some content if you review some of those videos about the negative 618 and the negative 100 as secondary and tertiary targets here. But the basic idea is we're going to go from this range to the negative 23.6. That's the very high quality, high percentage target, and you see it being reflected here as we. Let me get back over here as we see this here. Here's another stack, right? Now, why a stack? Because it's pulling from multiple. You see all the pivots it can pull from? I can actually turn that on to show you. Here, let me do that. So here in the settings, I've just gone into the parameters here, and here, for the most part, you won't want these on because there's too many lines, right? But if I wanted to see, right, I turn these on, show retracements, yes, as opposed to no, right? So if I get this out of here. Well, now you see. So you see from here all of the swing pivots that it's pulling from, because we don't know which one the algorithm's going to use. We just know that there's a high probability here we're going to get a reaction here. So you see it, and it's kind of the same thing over here, right? So here's what, as I was describing, you've got all of these pivots that are leading to this location where we have a high probability that we're going to get algo participation. They get all the targets. Same thing happens again here, right? They're pulling from multiple targets. You see it again. Now same thing here. Same thing here. Same thing here. Which one are they pulling from? But note, every time you see these green lines, that's the algorithm hitting its target. Right? No green line, right? It won't be there. But every time we see that green line, the algo is hitting its target. So let me go back into the studies and take that off, because that can be just a bit much. So let's take the retracements off. And once you've worked with it for a while, you'll find that you don't really need. Now, if you wanted to, in a pinch, right? You could, for whatever reason. Oh, here we can just do something like, oh, here let's do it this way. And I have this set to give me the measured move here. So here we're coming right to the 50. So if I'm pulling from the top pivot to the lower pivot, right, dominant to dominant, we're coming 50 within a tick. Target, 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 right? So here, from this pit swing high to this swing low to the 50, right? You see it based on what I've drawn. Well, here's where it hits its target. It's to the tick, right? And note what happens. It retraces, goes to the next 50. Now comes back another cluster of targets, right? It's incredibly consistent. Now, if I were to take that off, let's get that off. Now, what have I got here? This is a 5-minute. Oh, just to make the demonstration here, if I go to a 30, right, you're going to see fewer of them, but they're just as significant, right? Oh, what do I got here? An hourly. Let's go to an hourly. Same idea, right? See here, swing, right? This is one that we were just looking at. Come to a 50 to the targets. Now, what's important here with these is that you need to understand that while these, after the fact here, it looks like, oh God, how beautiful. Well, when this is being established, right, we get the swing, we start the internal retracement. Let's see, let's use a zigzag here. So if we're doing this, right, and we're coming back here, now when we get right here, the measured move won't fire until we get a certain distance from the pivot to lock it in. Otherwise, if we did that and went here and then it went up again, we'd have false signals all over the place, right? So we have to allow for the price action to move a small distance from that pivot before these will show up on your chart. Again, to avoid just an endless number of false signals, because we've got to get some distance. Now, if it were to show and then retrace and then come up here and blow them all out, then it will take it off the chart. right? So it's only going to stay on the chart on the assumption here that we're going to come down to target. If it were to blow back, then you wouldn't see it, because otherwise, if I could turn them all on, right, and show you all the failed measured moves. Oh, well, let's see. So here, let's create one. Oh no, that's the wrong one. Here, let's create one. Looks like this would have been a fail, right? So if I get that on there, and let's turn our measured move on. Oops, if I can get it on here, I think I can do it. Well, either way, here I'm not as good with Sierra as I am with Ninja, because I just haven't been working with it as long, right? So we get it right there. Let's see if I leave it there and I do that. Will that work? No, it won't work. Okay, well, here's the 618. So we can see clearly from this swing low here, we would have blown out here. So as it's coming up here, you wouldn't want it firing here. Oh, there's a golden zone, and then it goes through, and you're like, well, that's not helping me. So again, here, it's not like it would be there and be gone. It wouldn't be there because there was no push back the other direction to trigger it. Here, because we get the pushback here, then it fires, right? So you'll have to kind of see it to appreciate that, which of course that's part of the reason that we do our trials. So swing, retrace, get a little distance. Now it'll fire here, so you know it's there, and why that's important is that it'll give you the targets down here. Right, again, you wouldn't want it firing, giving you false targets, and then breaking, and then staying on the chart. So again, it has to move just enough distance here, so we know we have a pivot here, and then if it stays, right, we have targets. So that's, I think, kind of a good example of why we want to give you a trial on these, because we've had people write us and say, hey, I bought your measured move here, but at the pivot turn here, it didn't show me that it was there because it hadn't moved far enough. Now, if you're trading on a 1 minute or a 512 tick chart or something very small, you might say, well, how is that helping me if it's moving, 2-3% away from the pivot before it shows up? Well, certainly, if you're on a very, very small, if you're on a 30-second or a 144 tick chart here, that's reasonable to say, oh, it's moved too far here. I don't know that I want to chase it because I'm not getting the pivot turn to reduce my risk. My stop's going to be tighter. But if you're trading on something slightly higher time frame here, where it's not critical that you get the pivot turn or as close to the pivot as possible, well, then knowing those targets up there would be, I think, probably pretty meaningful and would have some value for you. Right? You have to work with it enough to start to see, okay, once those fire up here, well, if we're right here and I've got this cluster that's been left behind here and I can see these targets here, am I going to avoid taking that short here? Am I going to avoid that because I didn't get the absolute pivot turn? Maybe, maybe not, right? So it depends on your style. I think in many ways, the biggest advantage of having the measured move tool, the measured move indicator here, is not so much so I can identify that I can get the perfect turn here. It's to reinforce in your mind how substantial this algorithm is, how consistent it is. Again, doesn't matter what time frame we're looking at. You're going to see it over and over again. So we do have a solution for that, and that's what the auto fibs are doing, which will be in a follow-up video. But we make the distinction. They're really two sides of the same coin. One is showing you past, the other is showing you future. So the measured move is, so if we come back here and we go, here, how about gold? Here, we'll open up gold since we look at the indexes so much. Well, so here's a couple of nice examples. What have I got here? This is a 10-minute in gold. Swing, right? Now do you see what's happening here? This is a little bit tricky, but you have to understand here. What's happening here is I have a swing, I get a retrace, and so there's the algo happening within the confines of a larger, right? There's a larger one here, right? That's right here, right? So even within that, I've got little here. This is a counter trend. Here's this one right here going the same direction. So it's not like they're only going to be one direction. So I've got this monster one going down here, and then inside of it, I've got another one that took me up here to get to this pivot. Same thing here. Over and over and over again. Swing, 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 swing. Right, so here, this one breaks this time, right? It's already hit its target. We retrace, so that's from this low. Swing, retrace, right? Here's a tiny one. Swing, retrace, right? All those targets get hit. Remember, every time you see a green line, that's the algo getting its target, right? So here's a huge cluster. Oh, it's probably, yeah, that's going to be from something lower. Again, you see these huge, we call them top hats, where you have this cluster here. So you have a it's almost like a cushion, right? So you have, oh God, it's likely it's from this pivot here. If we come down here, now we're going up to these targets here, right? So let me get the hand over here. That's what's happening here, right? So we're going from here. That's likely hitting target right here. Not look, we're within ticks, but all of this is happening on the way to getting there. We've got these short ones here, right? The sell side is here as well. Doesn't change the ultimate destination here. We don't break the low. We have a little sell side here on the way. So all of this is in the context of the larger one here. So it's important that you understand where these are, because it will be very easy if you don't know where they are to buy right in or to sell when if you're here right here. Do you want to sell that? Probably not if you knew that was there. Now, every day people sell and buy into these without knowing they're there. That's one of the huge benefits of the measured move indicator. It's going to keep you from selling right into a golden zone or a 50. Now, of course, you can draw them yourself. Right? You can draw every one of these, right? But are you going to get all of them? Are you going to remember, oh, there's a secondary pivot there that I missed that I didn't get, right? Would I have known that there was a golden zone right there? It's important that you have these identified. Again, if you wanted to make the effort to draw them yourself, I think that would be a fool's errand, because you're not going to get them all, right? So it's so much easier. Right? It's not like this is an exorbitantly expensive indicator here, but I think what you'd find is the value would far outweigh the investment costs of this indicator. Let's go over to the YM just to show you that the market doesn't matter. It doesn't matter what the market is. Again, every one of these, right? So here, what have I got here? This is a 5-minute on the YM. Every one of those green lines, every single one, is the algo hitting its target. Every single one, right? And often it's multiples. It's like, okay, God, how's this helping me? Well, okay, so let's go. Well, let's try a 30-minute. See, let's slow it down a little bit. Right? Swing, retrace, swing, retrace, swing, retrace. Target, 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 target. Come in the other direction. Swing, retrace, target, swing, retrace, target. It's just over and over again, right? So to have a complete appreciation for how dominant this algorithm is, that's the real benefit of the measured move tool. Now, again, if you were a buyer down here for whatever reason here, knowing that these targets are up here can be useful. I would propose that. One point to make here, hitting a target is not a signal to take the opposite direction. So if we go swing, retrace, golden zone, we go up to that target, that doesn't suggest that you want to sell it. It's just we know there's an algorithm that's going to take, if not a full profit, at least a partial profit there, because there are secondary and third targets that it may be going for here. But these are very, very consistent, and it's just all comes back to this incredibly simple formula. Right, so here's the formula. Now it gets a little trickier, because you have to recognize that you have it, as I was just kind of showing you, you have it coming on the buy side and the sell side. So while we look here and you go, oh, okay, well there it is. Well, nothing's ever easy in the markets, right? So if we do this, right, if I bring this down here, you can say, oh, swing, retrace. Oh, I see it. Okay, well wait a minute. Now remember, it's on both sides, right? So it could just as easily be running into this here, where you'd have, get my arrow, right, you'd have this as a target here, right? Swing, retrace, here's the golden zone, right? Just as valid as this one, right? So it's working on both sides of the market, which hopefully you saw in those examples here. So knowing where they are is going to be meaningful. Now, which one, right? How do you know, right? Which one's going to get it? Well, there's some context would be important there. Where's the trend? What are you using to determine trend? Is it market structure? Maybe it's some Elliott wave. You think you had an impulse and then you had a three-legged correction here, something along those lines. There's no telling, right? The point is to identify them. And ultimately, as I would propose to you, it's not so much about getting that turn as it is the measured move indicator is really getting clear in your mind how dominant this algo is, right? Again, the market doesn't matter. Time frame doesn't matter. How about the MNQ, right? A lot of people trade this. Let's pop that open. What do I got here? 60-minute. Now, if you're up here, you know, you see this big wick here that runs right into it. Actually goes golden zone to the tick. Well, here are those targets. So if you're right here, knowing that you're coming off of this with targets down here, I mean, certainly this might be something that would influence a decision as to whether or not you're going to be long or short here, knowing you're coming off of this. Same thing here. Same thing here. Right? You see how it's just over and over and over again? Right? Now we're coming back the other direction. So here's the buy side, buy side, buy side, buy side, right? The trend changes. So these are really valuable. Now, when we look at the auto fibs, which will be on that page for that indicator, we'll look at how we can identify in the future where they're going to be, which is what the auto fibs is doing. Measured move, showing all the historical measured moves, right? Contemporary measured moves that hit. Auto fibs showing you all the potential measured moves, as we'll have all the 50s and the golden zones on the other side, or on the side of the chart, so you can identify where you might be looking to enter based on this algorithm. All right, so before we leave this, let's go into the studies and just revisit that. So once we're in the measured move here, there's only so many things to identify here. We're giving you the choice if you wanted to see higher highs and higher lows in there, right? That's personal preference. Show the retracements. Maybe when you're first getting started, that might be valuable, but you're going to have so many lines. I think majority of the time you're going to have that turned off. Do you want to show the measured moves? That's a yes or no, whether you want to see these. And then the levels here. Well, we give you the choice here of 50, 618, 65, right, on either side. And then your color choices. Do you want to see these? Do you want the diagonal line, right? The defaults should serve you well here. I like to make the 618, you know, I use one dash, one solid, so I can make that distinction between a 618 and a 65. Then the diagonal, and then the negative 23.6, that's our target here. I'll put that in a brighter green so it stands out, so I know when we've tagged a target, retrace, target, retrace, target. So there's really not that much to it other than, you know, the coding that went into identifying it. All right, I think that probably cover it. There's not a lot of complexity to it, but running this, I think you'll find will be, if you haven't seen it before, will open your eyes to how pervasive this is. Okay, when I'm on a 60 minute, let's go to a 1 minute just for fun. Before I leave here, so you can see this. I mean, it's not like I checked this and said, oh, well, I'm going to use this because it's particularly good. Here, if I can get it to load. All right. MNQ. All right. I mean, how many times does it have to hit? How many times do you have to see this before you recognize, boy, that sure looks precise. Like maybe I want to pay attention to this. That's 1 minute. 1 minute. Right now down here, right? So somebody sold it there. You think they knew they had that cluster there? Somebody bought it here. You think they knew there was a retrace? Look at right, retrace, right? Same. This is a 1 minute. 1 minute doesn't matter. I could be looking at a 1 week. Wouldn't matter, right? How about this one? Somebody sold it here. That's quite a top hat right there. Same thing here, right? Huge stack. Look, all the targets get hit. All right, that should give you plenty to chew on there. Again, I remind you, you've got historical content on the video that will be linked underneath. You've got Halsey's book as a reference, right? That's where I learned it, right? And then we adapted to the 65 based on what we saw, and we've tweaked it, and you know, as well with a few things that to kind of make it our own. But the basic premise of it, why the fibs, why the negative fibs, right? That comes from Halsey, and I think that video I did will give you some insight into how he came up with it. All right. Okay, with that, I will wrap it here, and you can look for the videos on the auto fibs if you want a little bit more insight into, okay, well, how is this going to help me in the future, less so than identifying what it's done in the past. Okay, that's auto fibs. All right, talk to you on that one.